What up, my beautiful people? Welcome back to another video. In the last video, we talked about top-down analysis, how to catch a trade with the flow of the market. This video is a little bit different. Everybody tell you not to take counter trend trades. Well, I beg to differ. That's all I take is counter trend trades mixed in with a little bit flow of the market. But in this video, I'm gonna show y'all how to do the same, using the same exact strategy and also using top-down analysis to your advantage. Before we get into this video, like the video, subscribe, and comment. By you liking, we reach more people. Help me grow the channel. We're trying to get big here, and we don't do that by ignoring what I'm trying to do. Like the video. Enough talking. Let's jump right into it. All right, so we have top-down analysis part 2. This time we're not going to go too much into detail because the first session we basically covered everything there is to know, the structure, switcher structure, what each time frame basically means, how each time frame has different structure. We covered basically every single thing there is to know with top-down analysis. And on top of that, we walked through how to catch a trade, flow to market trade, using top-down analysis. Now for part 2. Part 2 is my counter trend strategy. How do I catch trades and counter trend opportunities? So first things first, what do we do? Well, like y'all know, we have to identify the trend of the market. That is our job. That is what we do with the daily time frame, the 4-hour time frame, and the 1-hour time frame. Oh, actually, before we even get into, identifying the trends, I want to show y'all something in the Discord. So in the Discord, like y'all know, we have basically tips and tricks, everything it is that you need to know. Like, look, we have all of this, just all of this. That's all I got to say. We have 10 different market conditions, 5 bullish, 5 bearish. We have 6 counter trend opportunities. Well, trading conditions. So when we're looking at the market, right? We know last video we talked about the flow of the market, how to catch the flow of the market trades, how to ride the wave. Now in this, it's about how to catch our counter trend setups. In these 3 given examples, these 2 I look for this bearish engulfing formation. We have the bullish engulfing, the bullish candle followed up by the bearish engulfing. This bearish engulfing happens after we have the rejection towards these highs and we have that bearish engulfing candle signaling basically bearish momentum stepping into play. Same thing with this example as well. We have the recent break, price got towards these highs, we had that bullish candle, bearish engulfing, and we can possibly see that momentum continue to go. But as far as our counter trend opportunity, I don't really look for the bearish engulfing. I just simply look for price to close back underneath our resistance. And then as soon as price closes ours as our resistance, we would then use the 4-hour to 1 hour to identify certain things, blah, 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 blah. But we'll see that possibly in this video. I don't know. I probably will do an example of that. That way y'all just have all the examples of counter trend opportunities. Well, actually, I'm not. I'm only going to do this one example because if you join the Discord, you can see how we use counter trend trading. How do we catch these setups? Join the Discord, go to Playbook Strategy, watch these videos, and you will see exactly how we catch these setups. Okay, so now we identified the 3 counter trend examples bullish. We now see 3 counter trend examples bearish, and then it's just vice versa. We see that price is at these lows in a bearish trend. We look for the bullish engulfing to take this counter trend setup back towards the upside. Same thing is here. We be at the lows, bullish engulfing. We're looking for the momentum to take us back up, and then here we're just looking for price to close above and then take that trade above, back towards the upside. But say if price had to push the retracement, we would then look for that bullish engulfing to carry out the move. So now knowing that, we know that when price on the daily, also these are my daily structures. I will always take a trade from my daily structure points every single time. It's either at the daily recent breaker structure, the daily highs, or the daily lows. Every single example. You can also see that here. And then on top of that, we have recent trades, the recent counter trend trades where I'm explaining that exact thing. We see price on the daily time frame. If we look right here in the top left, price is bullish. We had this bearish engulfing. We found our entry. We wrote this trade. The next example, we lost this trade because price did not form that bearish engulfing at these highs. Therefore, we didn't have that momentum, which I was looking for. We lost this trade. Next example, we have the highs. We have the bearish variation pattern engulfing past that previous bullish candle. Found our trade, won this trade. Same thing here. We have the daily time frame, bullish. We're at the highs. We formed a bearish variation pattern, found our entry, won this trade. And then we have this one, double top scenario, bearish engulfing, got our entry, won this trade. Every time we have some type of counter trend opportunity, we are forming that bearish engulfing before we're entering and looking for that position. Okay, so now, as far as breaking this down, how do we use top-down analysis to find this setup? So first things first, like we said, we identify our trends. Once we identify this trend, we then identify what time frames are in sync. If my daily and my 4-hour are not in sync, we don't use it. And what do I mean by in sync? When the daily time frame breaks bearish based off of that break of structure, I would be looking for the 4-hour time frame to be breaking bearish as well, being in sync towards the downside, performing the break of structure at the exact same time. So now when price is forming the retracement, we will then have that retracement at the exact same time, going back towards that area of interest, which is why I say in sync, because it just makes everything a lot simpler, right? So in this case, we don't have that. Right? We obviously see the daily's bullish. We see the 4-hour is bearish, and we see that the 1-hour is also bearish. We now have the 4-hour and the 1-hour in sync, which means if the 4-hour and the 1-hour in sync, we are in a counter trend opportunity. Now we only use the 4-hour, the 1-hour, the 5-minute, and the 15-minute time frame. Why is that? Well, if we go back towards this cheat sheet once again, we see that the flow of the market consists of the daily, the 4-hour, the 15-minute, the 30-minute. We don't use the 1-hour. The counter trend consists of the 4-hour, the 1-hour, the 5-minute, and the 15-minute. We only use the daily time frame to look at where we are at in the market. Are we at our higher high, the recent break, or our lower low or higher low? So now we identified that prices in sync with the 4-hour and the 1-hour. We know that this is a counter trend opportunity. I'm looking for a counter trend sale back down towards the downside. So on the daily time frame, we see that price performs that break past our recent structure. We know that we are a simple break, retest, continuation trader. So as price gave us this break of structure, we are looking for price to have the retest to then continue towards the upside. But we see, based off of this break of structure, the 4-hour is not in sync. The 4-hour is in sync with the 1-hour. But let's slow down. So we identified that the daily is bullish. We identified that we're at the high point in the market. Price then has this candlestick formation that's being formed. We have the bullish candlestick showing that rejection candle, well, showing that rejection wick, showing us the slow down momentum. Prices now want to continue towards the upside. And then followed up, we have that bearish engulfing candle. As soon as this bearish engulfing candle was formed at these highs, I know that this possibly pushed the 4-hour to perform that break past that higher low, going from bullish to bearish based off of our bearish engulfing candle. Again, we know that each time frame has different structure. So just based off of this one daily bearish engulfing candlestick, we know that this possibly pushed the 4-hour to go from bullish to bearish, which also pushed the 1-hour to go from bullish to bearish as well. So now, knowing that, we see that we have the candlestick formation that we're looking for. We have the rejection towards our highs, which we're looking for. And price on the 4-hour has recently just formed this break of structure, which we are looking for. And if we draw it out, right, we have price that formed a break of structure. Price then had the switch of structure going back towards the downside. And if we mark it off like so, I don't know if y'all remember this, but we talked about this in the previous recording, the previous top-down analysis. We have our higher high, we have the higher low. Price then goes from bullish to then bearish due to the breakout of these higher lows. We then transition this towards here being our lower low, and then we move our higher high to here because this is the last previous high point that presented us with the lower low, the break of structure, which means if this is my lower low, this is my lower high. So this goes from our higher high to now our lower high. We see that the break of structure, the flip of trends, go from bullish, Go from bullish to bearish due to the break of structure around here, but the last structure break happens to be here. Keep in mind, we have the overall trend go from bullish to bearish, but the last structure inside of our overall trend happened to be here, which performed that last structure break. We then can mark it off like so. If you all remember, us being a break and retest trader, the last structure break price formed was around here. So I will be expecting on the 4-hour time frame, instead of price pulling back towards this break of structure, I'm looking for price to pull back toward the last break of structure. So pull back to around here. If we continue, we then see the 1-hour time frame doing that exact same thing. The moment price gives us the break of structure on the 4-hour, the 1-hour should be doing the exact same thing, being in sync. And like you all know, when we are in sync heading towards the same direction, I'm looking for the 4-hour to perform the break and retest, and I'm looking for, I can just copy and paste, and I'm looking for the 1-hour to perform the break and retest. If we do not have, if we do not have the break and retest on the 4-hour and the 1-hour happen at that same time, which means if the 4-hour does not pull back all the way towards that last break of structure, but the 1-hour does, we walk away. But say if the 4-hour pulls back all the way, but the 1-hour doesn't, we walk away. It's the same thing. I have to see both time frames perform the break and retest before we execute the rest of this position. The moment the 4-hour performed that break of structure is the moment the 1-hour also performed the break of structure. So now, since we know that the 4-hour and the 1-hour are in sync, like we said with the flow of the market, we use the secondary time frame to look for the overall area of interest. So we know that the 4-hour and the 1-hour are in sync. Since we know both are in sync, the secondary time frame will be our 1-hour time frame. On this 1-hour is when we find our area of interest. And if we take a look, it's the same thing as the 4-hour. We have the 1-hour go from this bullish to bearish trend due to the breakout of these higher lows. But the last structure break happens to be here. This is where we then grab our box tool, we draw out our zone like so, and then we wait for price to pull back towards this area of interest. Once price on the 1-hour has the pullback towards the recent break of structure, this will automatically allow the 4-hour time frame to have the pullback towards that recent break of structure as well. And then keep in mind, we want to be below both time frames as we're taking these trades. So on the 4-hour time frame, I want to be below my last structure break. I don't want to be above my last structure break. Say my 1-hour is below, but my 4-hour is above, and I decide to take a trade like so. Right? You would be thinking this is a good position, this is good, we can go, but no, price can easily find support like we've done before since we're above the zone and then continue towards the upside, taking you out of this trade. You simply want to wait for price to be back below the 4-hour zone while also being back below your 1-hour zone. So now when we're taking this position, we have no interruptions that will be stopping us from continuing this move towards the downside. We're below our support, treating it as resistance. We're below our support, treating it as resistance. And then looking at the daily time frame, we see we've already used the daily time frame as resistance, as resistance, as resistance, as resistance. Price has already shown us the rejection towards the daily time frame, maintaining underneath, treating it as resistance. The 4-hour time frame, rejecting the daily time frame as resistance, while now also rejecting our recent floor, treating it as our ceiling on the 4-hour. And then we're also doing the same thing as the 1-hour time frame. We've already showed rejection towards the daily. We have the recent breakthrough, the 4-hour support, the 1-hour floor, while now treating it as our resistance. We are below all time frames, which means it's time to enter our position. What do we wait on now? It's the same thing as the flow of the market, right? We wait for the 5-minute to go from that bullish to bearish trend because we know it has to go bullish to allow the 1-hour and the 4-hour to have the pullback towards that zone. But the moment we tap back into, we wait for the bullish to then bearish flip. And then let's actually make it red. So the moment we have this break on the 5-minute time frame is the moment we then look for that bearish engulfing on the 15-minute time frame, which means what? The bearish engulfing should look exactly, let's delete this, boom. This is the 5 minute, and then this is the 15-minute time frame. So the moment we have the pullback is the moment we have the 5 minute form that pullback. When we tap back into, when we're back up below our zones on the 4 hour and the 1 hour, once price gives us the break of structure, we look for the 15-minute bearish engulfing into our trade. Since we're using the 1 hour zone for our entry level, we use the 1 hour lows for our take profit. So now we're about to go into a previous trade. We're going to break down our previous trade, and we're going to show you all how to incorporate this into the live market. So give me a second. Okay, so we went to a previous. Okay, so right here, you can see GBP and ZD. This is the exact same thing we just walked through with the line chart example, basically. So this is going to be the easiest for you all to understand, which is why we're about to break it down right now. So on GBP and ZD, what did I see on the daily time frame? I saw that the daily time frame was bearish due to our higher low being here. We had our higher high being here, and then we had that recent break of structure being around here. I can see clear as day that my daily time frame is bullish. Once price formed this break of structure on the daily time frame around here, I went towards the 4 hour to see if we were in sync. We had the overall continuation break happen here on the 4 hour, but the last structure break happened here where price did not pull back to, and simply it wasn't going to be a good entry. But if we go back towards the daily, right, we see that the daily time frame was still bullish. And by the time we reached this high point in the market, price found rejection, and then price formed this bearish candle engulfing past that previous bullish candle. Let's go into replay mode a little bit more. So as soon as price gave us this bearish engulfing candle, we saw on the 4 hour time frame price go from a bullish to bearish trend. And as soon as price gave us this break of structure on the 4 hour time frame, I then went towards the 1 hour time frame to see if we were doing the exact same thing. And if you pay attention, that is exactly what happened. Price went from this bullish to bearish trend with the last structure break being here. So right now, I know that my daily is bullish. I know that my 4 hour is bearish, and I know that my 1 hour is bearish, which puts us in a counter trend opportunity with the 4 hour and the 1 hour being in sync. So if I go back towards the 4 hour time frame, I see that I'm at the highs of the daily time frame structure, which is good. And the moment price gave us this break of structure on the 4 hour time frame is the moment the 1 hour time frame did the exact same thing. And since the 4 hour and the 1 hour are in sync, we are using the 1 hour time frame to find our entry zone. On a 1 hour time frame, our last break of structure happens to be here, which is why we drew out this zone with our box tool. We can obviously see price treated as support when we're above and price treated as resistance when we're below. So as soon as price broke through our support, I then wanted to see price pull back towards this area, treat it as resistance, and then have that continuation back down, right? And if we fast forward, what took place? Boom, price pulled back exactly to our zone. And like we just said, on the 5 minute time frame, in order for this pullback to take place on the 1 hour, price had to go from a bearish to bullish trend to allow our higher time frames to form the pullback. And the moment price tapped back into our zone is the moment I was ready to start looking for entries. So if we fast forward, we see price continue in this bullish market on the 5 minute time frame. I'm trying to fast forward towards our entry. Okay, so as soon as price gave us this break of structure on the 5 minute time frame, you see how price went from this bullish to then bearish market due to the breakout of these higher lows. The moment price gave us this break of structure is the moment I went towards the 15 minute time frame. And on the 15 minute time frame, we did not have that entry signal, right? If we waited for the 15 minute closure to happen, the next 5 minute candle did what? Boom. We then confirmed this break of structure. We've already had the break of structure happen here, but the 15 minute candle was still forming. So as soon as this 15 minute candle had that closure, we then saw the 5 minute candle, 5 minute time frame, confirm this break of structure with momentum. We had beautiful momentum confirming this break of structure. The 15 minute candle left us with this bearish variation pattern. We had 1, 2, 3 candles were formed. On the second bearish candle, you would think it engulfed the bullish candle. No, it has to engulf the wick too. This candle did not engulf the wick, and if you have to zoom in to identify if it engulfed or not, that is not a strong enough candle. You should not have to zoom in. You should be able to identify the engulfing from a zoomed out perspective. So as soon as we saw this third candle perform that bullish engulfing while also maintaining underneath the 5-minute break, I then got in on an entry. But my entry came on a pullback on this 15-minute candle. One, I was just simply late, which allowed me to get a more precise entry, which I was happy with. So we found our entry, our stops was above, and on a 1 hour time frame, we're using the 1 hour entry zone, which means we use our 1 hour lows to target our overall take profit, which brought us back a 2.67% in return. But we was able to squeeze out a 3.84% in return based off of us allowing the trade to run due to us being right about this technical analysis. On a 1 hour time frame, yes, we are below our 1 hour zone. On the 4 hour time frame, however, yes, we are above our zone, but pay attention to this. When price had this retracement getting back above our 4 hour support, we also retraced back towards this daily area of interest. Our daily higher high formed a rejection, formed a rejection, formed a rejection. So the moment I saw this huge rejection towards this zone up here being our daily highs, I still saw high probabilities of this trade playing out because of the rejection towards our higher time frames. Yes, we're above our 4 hour zone. Yes, this is a more of a high risk trade due to that happening, due to us being above the zone, but I was okay with that. I accepted that risk and we still took the position. And after we found our entry on the 15-minute time frame, if we just let the trade play out, we see that the rest was history. Price did exactly what I expected it to do. There's nothing more, there's nothing less. I simply trade structure and structure alone. We saw price go from bullish to bearish. I looked for the retest of my zone. Once we had the retest of the zone, I simply allowed the 5-minute, the lower time frames, to get back in sync with the higher time frames structure, and most importantly, make sure we're below our higher time frame zone, aka our entry zone. Once I was able to identify that, I then look for the break of structure, which we already identified, which leaves us with the bearish engulfing candle. On our entry, stops above, I'm using my 1 hour entry zone or my 1 hour zone for our entry level. We use the 1 hour lows for our take profit. It's simple as day, and this is how we won this trade. If you want to see the rest of the examples, like I said, join the Discord. This is like, there's nothing else to say. I made the Discord so I can show you all of these examples in here. Like, it's not going to all fit in one, well, it can all fit in one YouTube video, but that's going to be a long video. If you want to see how I catch counter trend setups in this scenario, or even take a trade in this scenario, join the Discord. Link is in the description, and I'll walk you through each freaking setup. Each setup, I'll walk you through on how we caught these positions. So if you like this video, like always, leave a like, subscribe, and comment, because stuff like this will always be coming to the channel. And then it will just get better and better and better. So if you subscribe, you simply won't miss it. If you don't, you probably will miss it. I'm going to catch y'all later. Like I said, I pray it helps those who watch this all the way through. And if it did help you, leave a comment down below. I'm going to catch y'all in the next one.